What's up, everyone? Let's talk about a number that's got my complete attention right now. 15. That's where the fear and greed index is sitting. And here's why this matters so much. This is the lowest we've seen since those April lows that marked the bottom for Bitcoin and the entire crypto market before we shot up during summer. Now, I'm not calling this the bottom just yet, but what I'm really watching is how the market reacts after hitting this extreme fear level. When I look at the crypto market cap chart, this feels eerily similar to previous major sell-offs. Two things stand out. First, how deep this correction has been, and second, just how negative the sentiment has become. But here's what's really catching my eye. Just how oversold this entire market is right now. Let me break this down for you. When we look at the Crypto Relative Strength Index, the RSI, we're seeing that most of the top-tier projects are sitting in oversold territory. And I'm talking about the big players here. If we filter by market cap over 100 million, we're at 41% in oversold territory. Bump that up to projects over 1 billion in market cap, and most of this space is still extremely oversold. That's telling us something important. Here's my take on altcoins, and this might surprise you. I think most altcoins have been oversold since way back in January. I've been saying this for months, even when talking about projects like HBAR. Most of these altcoin charts haven't even touched their January highs. We're talking about 10 months of nothing but selling pressure. Want a perfect example? Look at XLM. This coin hasn't made a new high since November 18th of last year. That's a full year of underperformance. Most of these altcoins have been absolutely boring, just consolidating and staying oversold. And that's exactly why this fear and greed reading has me feeling pretty bullish right now. But wait, there's more. This isn't just a crypto story. On November 18th, we watched markets absolutely plunge across the board. Let me give you the full picture. The CNN Fear and Greed Index for stocks crashed to 9, the lowest since April. Crypto's Fear and Greed Index hit 11, completely wiping out Bitcoin's 2025 gains. The S&P 500 dropped 1.2% to 6,780, erasing a massive $1.3 trillion in value. What caused this chaos? Sticky inflation data, tech sector rotations, and China's economic slowdown all hit at once. Crypto wasn't spared either. We lost $1.2 trillion in market cap, with Bitcoin falling below $90,000 as people took profits and expectations for Fed rate cuts started diminishing. Now here's something fascinating from the Kibishaw letter that really puts this in perspective. That fear reading of 9 for stocks, that's the same extreme fear level we saw at the April 2024 bottom. But get this, the S&P 500 is only down 0.4% from its all-time high, and still up 37% since that April low. This is not what you typically see before a market crash, not even close. The problem is that people have serious PTSD whenever we see major sell-offs or corrections like this. And yes, I do believe this is just a correction. Speaking of Bitcoin, I've been talking about a fair value gap on the weekly chart. What exactly is that fair value gap, you ask? Well, that's a great question, and here's what I'm seeing. Here it is. This is the exact fair value gap I was tracking on Bitcoin. And guess what? We just filled the majority of it. We hit 89.3K. That's a pretty solid push to the downside. But here's the million-dollar question. Have we seen a massive reaction off these lows yet? Listen, we're getting a decent bounce, but let's not get ahead of ourselves here. It's nothing too crazy just yet. Here's what I'm watching on Bitcoin right now. If we've actually bottomed, and I'm not 100% convinced we have, we could definitely see another wick down into the mid-80,000 region. But here's my main focus. I want to see Bitcoin reclaim those November-December highs. We're talking about 104,000 to 104.4,000 to be exact. Even after we hit that level, we've still got serious work to do. There's resistance sitting around 109.2K, and then our major significant resistance is way up at 120K for Bitcoin. So we need a lot more from Bitcoin here. We need significant momentum and a real push before we can even start saying, okay, we've bottomed out. But here's the thing, with how the market's looking right now and this extreme fear sentiment, this typically isn't what you see before a market crash. Usually, you see fear and greed still at greed levels, or even extreme greed, not extreme fear like we're seeing now. Let me build on that point with something really interesting. According to Adam Kobesh from the Kobesh letter, we're simply in a normal stock market correction. Check this out. The S&P 500 is only down 4% from its record high, but sentiment is acting like the Magnificent Seven is going bankrupt. Why is everyone freaking out? Because we're in the middle of a technological revolution, and change is always met with resistance. Here's a reality check. The S&P 500 averages 4 pullbacks of 5% or more every single year. This is just a healthy technical correction before we potentially see the S&P hit $7,000. The takeaway? Zoom out. Use this fear to grab high-quality names at a discount and ignore the noise. Oh, and Nvidia earnings are coming up, so if that's your focus, keep an eye on it. But here's my main point. Corrections happen all the time. I honestly don't understand why people are so shocked that we've had 2 major corrections on Bitcoin so far in 2025. Let's take a trip back to 2021 for some perspective. I know it might not seem like we had many corrections back then, but when we look at the weekly chart, here's a correction, here's another correction, and another one. Oh look, another correction, followed by an even deeper correction. Then we had one final correction before hitting that all-time high. We had multiple pullbacks throughout 2021 on Bitcoin. What about the cycle before that? Looking at 2017 to 2018, yep, correction, correction, another correction. This is completely normal price action, where we see multiple corrections that actually support much higher price moves later. So here's the logical way to think about this. So far in 2025, we've had 2 significant corrections, and every single time people have said, that's it, it's over, we're never coming back, Bitcoin is done. Sound familiar? Every single time people panic and declare, the bear market's here, we've topped out, this is the worst cycle ever, blah, blah, blah. I remember the comments on this channel. I remember the posts on X during those times. Pure panic mode. But guess what happens next? All of a sudden, we start rebounding and Bitcoin makes a new high. Now, most altcoins didn't follow that time, obviously, but that's because Bitcoin was trading at such elevated levels. Here's what I'm expecting though. On this next run, we should see a completely different story when it comes to altcoins. Now let me tell you about some massive developments that just dropped. President Trump announced that $2,000 tariff dividend checks will be sent to Americans by mid-2026. Think about that for a second. Where's all that liquidity going to flow when it hits the markets? But wait, there's more. Breaking news, Japan is considering spending $110 billion on a new stimulus package as the Japanese yen falls to a near 35-year low. Here's my take. Own assets or be left behind. Let me ask you this. Remind me again what market absolutely loves it when the fiat floodgates reopen and currencies get devalued even more. That's right, crypto. Crypto absolutely devours liquidity. Check out what's happening right now globally. The US is preparing $2,000 stimulus checks. Japan is preparing a $110 billion stimulus package. China approved a $1.4 trillion stimulus package. The Fed is officially ending QT on December 1st. The US is issuing $1.9 trillion in treasuries per year. Canada is restarting quantitative easing. Global M2 supply hit a record $137 trillion. We've seen 320 plus global rate cuts in the last 24 months. In what world is another massive wave of inflation not on its way? Now, this might sound bearish, but for crypto and deflationary assets, this is where we see prices go absolutely crazy. This is exactly why I'm not fazed by what's happening in this market right now. I don't care if someone thinks, oh, crypto's in a bear market or whatever. Listen, if you think crypto is in a bear market, that's on you. But I'm holding strong. I'm not fazed by this recent price action because I'm watching liquidity ease in a big way. I'm watching massive amounts of liquidity flow into these markets, especially crypto. Everyone keeps talking about inflation, inflation, inflation. What's the best way to counter inflation? Hold deflationary assets. I couldn't think of a better strategy. When fiat floodgates reopen and currencies get devalued, what market loves that the most? Crypto. Crypto has always loved that scenario. Let me wrap this up with an incredible post from Julian Battelle. He's the head of macro research at Global Macro Investor, and these points are absolutely solid. Here's some perspective that will blow your mind. Think back to the 2016 to 2017 cycle. Bitcoin took a 20% hit, 2 separate 30% hits, 1 35% drop, and 3 separate 40% flushes. It was absolutely relentless. Yet that market still delivered a 46x move. Let that sink in for a moment. The volatility, the fear, the corrections, none of it stopped the ultimate outcome. Now, before I wrap this up, let me share some incredible perspective from Raoul that will put this current sell-off into perfect context. He said he wanted to show just how normal these corrections really are. Check this out. Bitcoin corrections, 2024, minus 32%. 2025, minus 32%. Right now, around minus 28%. This is completely normal. You've lived through this before. Solana corrections, minus 47%, minus 67%, and currently minus 48%. SUI corrections, 2023, minus 69%, 2024, minus 79%, 2025, minus 68%, currently minus 64%. The technicals are absolutely oversold right now, and sentiment, it's the worst I've seen this entire cycle. But here's the thing, just like I showed you with Bitcoin's history, we've witnessed these exact types of corrections before, and we still continued making new all-time highs. Here's what's fascinating. The human mind conveniently forgets how awful those corrections felt, because the final outcome completely rewrites the narrative. Look at this current cycle. We've had 4 separate 20% pullbacks and now 3 30% pullbacks. Nothing about this is new. It only feels painful because you're living inside the move right now. And here's where it gets interesting. If you're anchored on the idea that this cycle peaks this year, which isn't our base case, but many people believe this, it becomes very easy to convince yourself that you missed the bulk of the move, that it's all over and the best is behind us. What really stands out is how similar these corrective structures have been. When you compare the patterns, the magnitude of pullbacks, and the time spent correcting, it suggests we're getting very close to the end of this move. The patterns are almost fractal. They keep repeating with similar size and timing. It's incredible when you see it side by side. To Raoul's point, sentiment is completely washed out. Everyone's calling for the top. People are capitulating emotionally, not analytically. That's exactly the environment where bottoms tend to form. RSI is sitting at 28, and our technical indicators are flashing oversold signals almost across the board. Nothing's guaranteed, but the probabilities are heavily leaning toward a bottom forming this week. Here's something most people are overcomplicating. Bitcoin's traditional 4-year cycle can extend, and it's actually simple to understand. If the business cycle extends, the crypto cycle extends. Bitcoin is a macro asset, pure and simple. So when I think about everything we just covered from Julian and Raoul, and then look at the current global situation, it feels like we're setting up for the next massive move in crypto. I think 2026 is going to be an extreme fiat devaluation phase, and that's going to support risk-on assets in a huge way. This could bring a flood of liquidity to these markets like we haven't seen before. Look at what's happening around the world. Stimulus packages lining up, quantitative easing becoming reality, QT ending in the US. This is an incredibly significant situation for crypto. Now listen, nothing is guaranteed, and I'm not promising positive price action, but I'm betting on the fact that we have a much larger run-up coming in this space. Could I be wrong? Absolutely. Only time will tell. But based on everything we've covered today, the fear and greed index, the oversold conditions, the historical patterns, the global liquidity picture, I'm feeling pretty confident about where we're headed. So with that said, I hope you enjoyed this deep dive. If this analysis helped put things in perspective for you, smash that like button. Let me know your thoughts in the comments, and I'll catch you in the next one. Remember, in times like these, it's not about timing the market perfectly. It's about understanding the bigger picture and positioning yourself for what's coming next. Stay strong out there.